Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Amish Shah, president of ALTR Diamonds, to discuss the impact of sanctions on Russia and what that's going to mean for the diamond market. Amish, it's great to see you as always. Welcome back to Trade Talks. And I never thought after the 4 or 5 years interviewing you that we'd be talking about this particular topic. Usually we're looking at trends and the technology behind lab-created diamonds. But how much of the diamond market is Russia responsible for?
So when you think about it in the bigger picture, just to take you from history to today, Russia has been the largest reserve of diamonds since 1950s. They had almost 1 billion carats in stock, and today the reserves are at about 650 million. At 650 million carats, as of last year, they were almost about 50% of the world's stock, reserve stock of diamonds. From a value perspective, they're about 28% of production. But when you think about it, and based on the qualities that are consumed in between the gem quality and the industrial, there are about 40% diamonds in the supply pipeline at this point of time. Hence, they are one of the largest suppliers in the marketplace. Last year, they put in 45 million carats into the system, valued at about $4.5 billion. And it was 40% higher than the previous year. So they have had strong demand, and the numbers have consistently been going up.
So what will the sanctions on Russia, how is it going to impact the market overall?
So the sanctions are not directly on Russian diamonds. You know, just like other commodities, there's no direct sanctions on the products itself. The sanctions are either with the banks or like the CEO of the largest producer out of Russia. What will be important is how the financial transactions actually take place and how the consumer sentiment plays out. The Jewelers of America has recently put out a note requesting its members to avoid and not trade, sell metals or precious gems or finished jewelry that have Russian or Belarusian origin. So it'll be interesting to see how the consumer reacts versus how the trade reacts.
And how will this impact the consumer? Do you expect prices on diamonds to go up on the margin?
So when we think about pricing, you know, diamond pricing from the last fall to right now is almost about 20 to 25% higher than the previous years. The producers of earth mine diamonds have consistently raised prices, including almost every single mine. With this scenario, if there is a shortage of goods, I think we're going to see a big spike in pricing. But very importantly, it's going to depend on how the consumer reacts. But one thing, Jill, which is very important is that today the consumer has a choice. You know, a geopolitically conscious consumer who wants to stay away from products that are in any conflict territories has the choice of fine jewelry or engagement rings or fine jewelry for personal use or gifting from brands like ALTR or similar, who are making jewelry with US certified recycled gold, as well as diamonds that are grown above the earth, which are not grown in any of those territories.
All right, Amish, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thank you, Jill.